Now let's move on to taking a look at the Nigerian markets before we focus on the fixed income and FX market. Let's see what the Nigerian all-share index did today. That closed at 33,536. That's up 0.2%. We saw gains in Nestle, Total, Okomo Oil, WAPCO. On the other hand, we saw losses in Dangote Cement. That came down 0.5% today. The banking sector leading volume traded, lots of activities in Skybank, Wema, Unity Bank, UBA. But let's move our focus now and take a look at the financial news that's driving the fixed income and forex market. And for that, we're joined by Dare Otitoju, who's an FX trader at global markets at Stanbic IBTC Bank. Thanks for coming on the show, Dare. Let's move on straight and talk about the Naira. Now, there's some pressure in the interbank market anticipated today, especially as the next FX auction date falls on a public holiday, so that's Monday. The Naira, of course, today we saw that weakening to 158.6 Naira per dollar. I think that's purely because of the weak inflows we saw from foreign investors. I think that, the weak inflows that we're seeing from foreign investors is becoming a trend. Are you more worried that the Naira could weaken further?
I'm not sure that we don't need to worry at this particular time. We've seen 159.5, and then there was a reversal as a result of flows, especially going to next week. Notwithstanding the fact that yes, you're going to only have one for next week, which is going to be happening on Wednesday, But notwithstanding that, we expect a lot of oil flows, which is the usual month-end flows, to also come in next week. Quite a number of them did not come in this week, so we expect more of those ones to come in next week, and especially the big one, which is the NNPC. If all of those flows should come into the system, then we might probably see the currency stabilize between the 157 and 158 level all through next week. From offshore perspective, yes, the trend has reduced drastically as compared to what we normally have, but notwithstanding, we've seen their presence of late, especially between yesterday and today in the fixed income markets.
Now, the $300 million on offer at yesterday's WDAS auction, I believe that was all taken up by the banks. We've seen the amount on offer at the WDAS auction continue to increase. Is it sustainable for a CBN to keep defending the currency this way?
Looking at the reserve that you have, and central bank have always claimed to tell us that they are very much in track when it comes to keeping the amount of FDI flows that we have had into the country. So, and comparing that also with the reserve, I'm sure they will be able to defend the 3% band that they have. And don't forget that their 3% band is also limited to their own WDAS levels, not necessarily the interbank level. However, they are very conscious about the fact that they don't want the interbank market to go that high that will be completely outside their own levels, that will now put pressures on their own WDAS window, which is why usually they come to do interventions.
Now, we saw yields in the secondary market edging higher following yesterday's OMO auction, especially in the short mid tenors. It would be good if you could give us some detail on the OMO auction today. I also believe that we had over 300 billion Naira in OMO maturities and treasury bills expected today. So give us an update on what's gone on in the T-bill space today. I believe that yields are up 0.2%.
Yes, for the treasury bill, the reality of it is that right from January till this time, central bank has actually been struggling with mopping up liquidity in the system, and this is as a result of the various maturities that they have. Some of the OMOs were some of them that were done for last year when they were doing the one-year OMO bills. So quite a number of maturities are happening, and this is possibly going to be the trend up to probably the June this year, when we will now see from July to December, we'll see a reduction in those maturities that we're going to have. So in terms of liquidity, there are going to be a lot of liquidity in the system, and that is really what is pushing up the yield. For today, they offered 150 billion, but probably because of the levels at which banks went, they didn't sell. So which means they have a rate in mind that they don't want to go outside that bucket and being desperate to mop up.
Now, of course, there's some talk about whether offshore investors should be allowed to take part in buying OMO bills. What's your opinion on that?
The reality of it is that offshore participating in OMO bill, I don't see how that reduces liquidity. Really, because they are coming into Nigeria, they're not bringing in Naira into Nigeria. So if you really want to mop up Naira, central bank is the only medium where you can inject Naira into the system. And so if they want to mop up Naira, the fact that offshore are participating is really not going to have impact on that. However, it will have impact on the amount of dollars that they will be selling at WDAS. But I don't see WDAS as the medium for their mop-up. So what you're probably going to have is that if offshore comes in, if they allow them to participate in OMO, what you're going to see is that you're going to actually see that the cost of actually of the mop-up is going to reduce, because the offshore will be able to take substantial size of the OMO. And then on the exchange side, because they will be bringing in dollars into the market, it will also stabilize the currency, if not even appreciating.